Well, hello there. I'm your host, Nickey Mirchandani, and you have tuned into the weekly IPO Wrap, the segment that we conduct every week to basically give you a handover of what the coming week is looking like, and of course, how's the week been so far, too. For the coming week, you have one Mainboard company which will be coming up with an initial public offering, and almost three SME IPOs which will also open up for subscription. Nova Agritech is in focus on back of that. And apart from that, you're also looking at Mediassist Healthcare Services, which would be listing in on Jan 22, 2024, of course. Within SME segment, you have Maxposure and Qualitek Labs, which will also be listing in. Meanwhile, Brisk Technovision, Phone Box Retail, Delaplex will be among some SME IPOs which will open up for bidding. But to take the discussion forward, we're being joined by Avinash Gorakshakar, who is the Director Research at ProfitMart Securities, and Prashanth Tapse, who is the Senior VP Research Analyst at Mehta Equities. Evening, gentlemen.
Very good evening.
All
Yeah,
right,
good evening.
Avinash, I'm going to start up with you. What do you, make out of this Nova Agritech? It's going to open in for bidding next week. Do you find the valuations attractive vis-a-vis compared to peers? Tell us more about the business and, of course, the competition that the company is facing.
First of all, see, Nova Agritech is a kind of a agrochemical player, which has more than 720 product registrations and more than 15 registrations, in the European markets. I think what is interesting is the company is going to tie up with a strategic partner in ensuring that it gets more patents for new geographical markets. And I think numbers have been pretty decent. I think they made a profit of roughly 28 crores for FY23. The first half performance for the company has also been good. I believe that the IPO price at around 41. The forward multiple which works out is around 18 times. I think for a well-established player which has got a decent product registration kind of backup and which is a steady performance player. I would believe that one could definitely look at applying for a long-term kind of upside, a decent kind of listing gain. Valuations are not cheap, but at the same time, looking at the kind of product bouquet and the kind of opportunity, I believe FY25 should be a lot better for the company. So I think one can look at moderate listing gains with good long-term risk reward. So I think one should definitely look at it, but definitely don't expect fireworks on listing. But yes, it's a good long-term bet. One were to look at the agrochemical sector where the company has got very interesting, solid product kind of spread. I believe that should be an
Sure, Prashant, I'm going to come to you. A, your take on valuation, and B, what do you think are the three factors which should be looked at or are essentially the risk factors for this company?
For me, Nova Agritech would be a decent listing in candidate and not a long-term player because there are a lot of players in Indian markets who are into agrotech and from many years. So on the valuation per se, I think yes, what Avinash said is 18%, 18p for forward P would be a reasonable valuation, not so cheap, not so costly again. But yes, they are into very great sector. One is agritech, soil testing, and they have a deep penetration of connecting the farmers. I think that is the main point what the company is looking at. Plus, they are doing a lot of R&Ds to get a lot of registration of products, which is again a positive product for the company. So overall, for me, a decent listing gain candidate with the 20 to 25% listing gain. If we get it, it's a good way to book profits on that. For long term, I'm not so bullish on the company. I need to wait and watch for post listing performance.
Okay. Sorry, Avinash, you said that you're giving it a subscribe on long-term basis for this one, or are you also looking at it just as a listing gate candidate, just like Prashant is?
No, I think listing gains apart, I think the track record of the company for the last 3 years has been quite decent. So I think
I'm
whenever
sorry,
such
there is
companies,
just somebody's phone which is ringing, which apparently is leading to a lot of noise in the live
can you hear me now?
broadcasting. Yes, please, please go ahead.
Basically, see, we have seen that the last 3 years has been extremely encouraging for the company, a very good track record. And I think, see, this business is all driven by climatic conditions. So hopefully next year the monsoon is proper, the field acreage is good. I would not be surprised that at least a 18 to 20% top line growth and a similar growth in the bottom line for FY25 looks possible. So I think unless we get some more data points, commenting on the long term would be slightly premature. But I would understand that if they maintain the track record, what they have achieved in the last 3 years, I think definitely it could give a decent risk reward in the longer term, which means the next 12 to 15 months post listing.
All right, so it's a subscribe on long-term basis, unlike what Prashanth is essentially looking at. He's looking at just the listing pop for this one. Also, do bear in mind the fact that markets have been rather lackluster, and we aren't really demanding, or let's just say the IPOs in the recent year are, in this at least year, aren't really demanding a huge premium at the time of their listing. But since we have already spoken about that, let's also talk about Epack Durables. I'm sure both of you must have seen through the company. We also spoke to the management today, and it's in a couple of products per se, where it's doing the original design manufacturing for the AC. It's also into the kitchen appliances and water storage, a bunch of things, induction cooker storage and all of that. Prashant, I'm going to come to you on this one. Do you like that IPO? Would you give it a subscribe for long term, or you think it's just something that one needs to track for listing gains, because it is a day one of subscription for Epack Durables too?
I think again a decent company in the markets right now. The way you said, it is the second largest player after Amber in terms of manufacturing lot of RAC and other original design manufacturing products in India. But for me, valuation is a little bit of concern right now. I would like to see a 2-year, 3-year company. Then the valuation looks reasonable for me. If you see the first half and the last year valuations, they are a bit very much stretched right now. But the way they are going forward, manufacturing plant has been newly built up very soon. So that will be giving a lot of revenue forecasting for next financial years. On valuation, I think 1 or 2 year view would be a good to see this company for a long term. But for listing in, I don't think we will be seeing any listing in this company right now. A decent listing would be expected, but not much.
Okay, all right. That's the word coming in. For me, Avinash, there was a little bit, at least when we speak about the Epack Durables, what essentially I could figure out looking at the financials was that the margin seems to be a little lower as compared to that of its peers. That was one. I could see that the valuations were a little more priced in as per the industry standards. That's second. These were two concerns essentially for me, but how is it for you?
I think first of all, Nickey, they are the second largest player, as you rightly mentioned, in the ODM category, and the ODM category is going to grow exponentially over the next, say, 5 to 6 years. I think they got marquee clients. They obviously have other segments apart from the room air conditioner segment, where they have a market share which is quite dominant. I think the only concern is that valuations seem to be pricey on a EV to EBITDA basis on FY23. The stock is being offered at a 20 times EV to EBITDA, and price earning multiple is almost 50 times. So I think in terms of listing gains, probably a decent listing. But longer term, I think only if somebody were to remain invested here for the next 2 years, one could definitely get a better risk reward. At least for the next 1 year, I won't be surprised that the stock may give you access to 25-30% kind of upside. And thereafter, I think markets would look at data points, quarterly numbers, management commentaries, because the market opportunity is very large. Despite being a low margin player compared to Amber, I would not be surprised that the opportunity to grow is quite massive, and that's what the market would be looking at.
So it is a subscribe basically on long-term basis, right, Avinash?
Yeah, I think we have been telling our clients that if you want to have a long-term exposure, you'll get more money. Listing pop-up may not be great because already valuations are stretched. But longer term, I think this business is not very easy, not many players, and it's a very concentrated market. So I think there's a good opportunity to grow. So longer term, I think it will make more money rather than just a listing.
All right, Prashanth, what about you in that case? Are you also looking at it for long-term basis, or you think you're just going to be tracking it maybe for a premium for this one as well?
I don't think any listing gain would be coming in the company. Again, I agree with Avinash for a long term, 2 to 3 years, because a lot of products, lot of new products, they are coming out, and 1 to 2 years view, I am positive on that.
But both of you, I mean, if you're not looking at something like listing pop, if you're looking at 1 or 2 year kind of fundamental, the valuations aren't really very attractive. The margin profile has been lower. The working capital cycle is a bit of an issue. So why subscribe at it at all? Why not look at some other candidates in that case?
I think
I,
the fund which they are rising right now will help them to reduce their liquidity and the debt levels at this point of time. And the new capacity which they have opened up in December 2023, which they will definitely give them the new growth going forward, but not immediately. But the new segment, the durable white goods segment, will help them to grow faster. And the clients they are servicing are really doing good, and the volume in AC segment is growing at faster rate of 8 to 10%. That will be very decent for the company. For me, 2024, 2025 valuation will be cheaper, but not at these levels.
Okay, that's point well taken. And also, in terms of the market share, believe I was talking to the management and they highlighted that it was sub 10% when they started off, and now they're at 24% with the kind of added capacity that they have. So the trick of the business is essentially growing up their capacities to obviously gain a higher amount of market share, which also the fund raising typically addresses in. But Avinash, what's your take on that? What are the risks potentially that we perhaps left out for this one?
I think the biggest risk is that the room air conditioner market is a cyclical market. A couple of years back, we saw that the entire entire AC segment underperformed, and at that point of time, ODM players obviously depend on OEM kind of commitments. So if there is a slowdown or maybe some sort of a abnormal kind of demand kind of letdown in air conditioners, then I think it could hit them. But otherwise, it's a very stable business. And I agree with Prashant that valuations seem to be pricey. But looking at the kind of appetite in the markets, I'm not of the opinion that this stock will open below its offer price. So I think there's going to be enough market demand. I think one has to take a call as to once the stock gets listed, how this company is going to ramp up its operations, because from 10% to 24% is definitely a very good achievement. The market expects that this could further go up to 27, 28% over the next say 2 to 3 years. So I think it's going to be a volume driven exercise, and I think long term prospects are good. I think IPO, obviously is a little pricey. There's no doubt about it.
Okay, the final one which I wanted to discuss, of course, is Mediassist Healthcare Services, a TPA company which essentially handles in a lot of admin work related to the insurance processing, claims processing, which takes place, of course, one of the first mover advantage coming in for Mediassist. Very few players there, a big market share for Mediassist. Prashant, come in on this one. What do you make out of it? What kind of listing are you expecting? You, of course, given a subscribe to Mediassist the last time we spoke, but was it just for listing pop, or you think it's a fundamentally strong business that we're looking at?
A decent fundamental good company for long term. I think there will be not so big listing gains. A 5-6% listing gain can be seen on the Monday trading session. Depends on the market conditions again. But I like this company only because of the penetration in the insurance sectors. If you see last 5 years back, the insurance sector penetration was around 7 to 8%. Now we are at 16% of penetration, and we are expecting, and the industry is expecting almost 33 to 35% penetration in next 5 years. So considering the industry growth and the clients which they are servicing and the clients' dependability on the TPA services, I think this company will do great. A decent company, decent growth. They are growing 25-30% top line, and margins are really much sustainable. Overall, for me, a long-term decent company to hold on.
All right. How about you, Avinash? Are you also looking at it as a long-term play?
Yeah, I think the business opportunity is pretty large in India, and I think Mediassist has got good insurance companies, good partners to work with. I think I was just seeing the financials. I think even for the first half, the company has reported a profit of roughly about 4.5 crores compared to 7.5 crores for full year. So I think definitely numbers also seem attractive. I think the issue may get oversubscribed quite significantly because it's a very small issue. But longer term, I think this business looks attractive. As long as insurance sector grows, I won't be surprised that you'll find a lot of support for such ancillary players, because it's going to be a business which is related to how strongly the insurance market grows in India, and that's where the opportunity is.
In fact, I was chatting with the management and I asked them that, what do you think? Are you like a proxy play to most of the insurance companies around, like ICICI Prudential Star? And they just said they actually complement and build on to the structures which are required in by the insurance companies essentially. And like both of you have highlighted that there is a significant amount of under penetration, at least when it comes to insurance in Indian market as compared to that of globe. So clearly the scalability and the size of population essentially that we have is a win-win for them. But Avinash, what kind of premium technically are you looking at the time of listing? What's your expectation?
Yeah, I think looking at the IPO subscription numbers, Nikki, I think it could be a very strong listing. It's no surprise that just in the first couple of days, the subscription levels have been very massive. So I think it's going to be a bumper listing. Thereafter, I think you need to look at numbers, and I think you need to wait for probably a proper correction, because normally there is some euphoria whenever the stock gets listed. After some time, I think one could definitely dip in once you get little better knowledge on the company, management commentary, and obviously valuations. Post the listing will be a function of what kind of growth they put in. So I would prefer to wait for some time, but listing should be a bumper one. That's what my thinking is.
All right, Prashanth, Avinash is clearly shied away from giving us a number. He's just said that it's going to be a strong listing per se. But Prashanth, what do you make out of it? A 13, 15, 20%? What kind of premium are you looking at for this one?
Just near to 10% would be my expectations, because the decent company, decent growth, nothing wow. They are just a proxy of the insurance company growth. So 10% plus would be a decent listing gain from my side.
Okay, it's not exactly going to be a very fair question to ask, but I'm going to pose it irrespective. Nova Agritech IPO, you have the Epack Durable and Mediassist of the three companies. Completely different line of business, I agree. Completely different sector, I agree. But which one of the three, if you were a new investor who did not perhaps get in a chance to tap into the public issue or failed to subscribe for it and got any allotment, whatever, in either cases, do you think which out of the three, which one would you actually go for after listing?
I think MediFest would be the company which I would like to be invested in the company post listing as well.
And Avinash, for you?
No, I think I would bet on the agri theme, because clearly agri has underperformed in the last 12 months. But hopefully, agrochemical sector is now catching up. I think at 41 rupees, I would not be surprised. There's very little to lose. So I think that would be a stock which would be on my radar.
All right, Avinash, we're just going to leave it at that. Prashanth, also, thank you so much for taking out the time, both of you, both the gentlemen, and having this conversation with us. It was indeed a pleasure, as always, chatting with you all.
Thank you.
All right, that was all. This is the weekly wrap that we are looking at. It's going to be a rather somewhat dull week coming in for the primary markets, which is to one Mainboard IPO, which will open for subscription next week. Of course, this week you have Epack Durables, which is open up for subscription. Day two would be on Monday. But that's all that we have in terms of the wrap. But thank you so much for tuning in.